What's going on, guys? So we're going to take a look at the S&P 500 as well as the triple Qs, which is the NASDAQ 100 ETF. Now, coming off of a crazy last kind of couple of weeks, a little bit of a back test into some of the support, and realistically a very wild last two trading days. Going from losing that 200-day moving average to quickly the bulls kind of stepping in, reclaiming that supply, not only just reclaiming the 200-day moving average, but getting back up over their 5 and 10-day short-term sentiment moving averages, and pretty much just cents away, just stepping stones away from reclaiming big daily macro levels that can really start to elevate this next leg higher here. And I'm going to kind of show you guys that now, where exactly you guys as traders should be going risk on, where you can feel a little bit more comfortable about holding overnight long positions, is just a little bit away here, especially on the SPY. So if you can see kind of where we stopped here on the S&P 500, we stopped right under this LR50 channel, and as well as right here under this 20-day moving average here. So we're looking at a price of around 405, which is just about a dollar move higher. So with that kind of being said, any close over 405 and some change on the S&P 500 is a place where maybe we can start looking to put a little bit more risk on for some swing trades day to day on the S&P 500 with a very small and tight stop. So the last thing you would want to do is be long here at this macro supply to have this pull down $2, $3, $4 against you, kind of giving you that risk. Because as of now, your next demand level that you could use as a macro daily support, kind of as a stop loss, is going to be 309. That's around 5 points down. So the last thing you want to do is enter in long positions, start swinging here under supply to have this pull down 4 or 5 points and have this put you into drawdown before potentially maybe you get stopped out just to see this run days later to kind of clear out that macro supply. So what exactly we want to do is we want to see the S&P 500 break this initial 405 level. We want to see it put in a high, and then we want to see it pull back. Your stop loss is going to be any close below that 404.75. And then what you would want to see is that second wave through that new high over 405 is going to be your indication to kind of go risk on. We have room all the way up here to the upper Bollinger Band at around 418. You can see it coming into this area here. I could see price action start to get a little bit choppy between a price of around 410 and around 415, but this could be a great profit taking zone. Remember, they don't have to always touch these levels of supply and demand. What you want to do is get in on these clear breakouts over or short under, and then you want to be taking profits into the next area. Now, of course, if you're going to take multiple contracts or multiple lots of the S&P 500, what you want to do is start to initially take your profits on the run up here, lock in some gains, and always make sure to hold the runner until max potential. Max potential being that upper Bollinger Band. So again, we might be 1 or 2 more days away from the S&P 500 kind of reclaiming this level. And if we do reclaim this level, then that's when we can put a little bit more risk on the table with a very tight stop loss here under this channel level. So again, we want to see a break of 405. We want to see it put in a new high, stay patient. We want to let it pull back a little bit, whether it be intraday or even overnight. We want to see this 405 hold, and then once we do confirm that new high over 405, that's when we're going to want to kind of push our chips to the table, use this area as our stop loss, and kind of ride those trades for some potential gains on that leg. And if we can take a look at the triple Qs are a little bit more closer, just a few cents away. You can see we literally stopped right exactly at that 20 SMA here. And if you kind of look at where we're at here, we're kind of clearing out 1, 2, 3, 4, 5, 6, 7, 8 days worth of trading. So realistically, if the triple Qs can sort of break this 20-day moving average this week, put in this new high, allow it to pull back and hold this 20-day moving average, it would give enough time for the shorter term sentiment rising supports on the 5 and 10-day moving average to kind of slowly creep up and act as support. And this would be the start of our next leg. It would also be breaking this 1-month downtrend that we've been in here. Again, if you kind of look at it from a macro perspective, this is very healthy of a back test. This is a first test of the 200-day moving average, the first back test of the 200-day moving average that we've had all year. If you've been trading and you've been watching the markets, we had a phenomenal January followed by a little bit of a stagnant February where we kind of just put in these lower highs and kind of slowly back tested, but our first successful back test of this 200-day moving average has been a successful one with, you know, a very, very significant bounce here, going from lows of 288 all the way to highs of 299. So almost about 10 to 12 point move in just a matter of 2 days. Now, we could see a little bit of an inside bar day, or maybe 1 or 2 days worth of sideways action. Maybe we put in a high and then we pull back. But again, that's exactly what you're going to want to see. You're going to want to see us break this 20-day moving average, put in a high. You would want to see it pull back, and on that pullback you're going to want to see if these rising macro supports can hold, and that next second attempt pass through of that new high is where you're going to want to go risk on. That breaks this downtrend. We have maximum potential all the way up to around 311, so that's going to provide a very expanded open up big expansion channels on the NASDAQ 100 stocks, and a lot of stocks on Friday really have set up to go. And if we kind of look at what's going on here with Netflix has been on a nasty downturn here, pulled right into this macro support. Netflix is just about 1-2 points away here from really confirming 317 and some change, and going all the way up to 324. If we look at Nvidia, this has probably been the strongest stock even through the whole downturn here. 1, 2, 3, 4, 5, 6, 7 days of consolidation here. Now again, for the third time, testing this macro earnings high here, and if we can get over this 239.5, we can really see this start to expand into the 240s, potentially even 250s. If we look at a couple of other stocks, Meta got their breakout, same kind of deal here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days trading below this area here, kind of holding this bottom floor of 168. There was a great level that I posted up in Evolution Traders Discord at 178 breakout, pretty much broke out on Friday morning and never looked back, put in a high of 186. Phenomenal move, up 10.5 points on the session. Meta still has a little bit more room to kind of run into that 189, 190 before we see any sort of significant back test here on Meta. Again, as long as Meta can hold this 176, 178 breakout, still looks higher to kind of get up here into the 197s, 200s on this continued move. If we take a look at a stock like Apple, same kind of deal here. Apple pulled all the way in, lost this 200-day moving average, looked very, very weak, with the next support level being at around 143. Apple, same kind of deal here, broke out for 2 days in a row, reclaimed all of its 5, 10, and 20-day moving averages. Apple initially is going to have room into 152.50 here. I would expect it to come into this supply zone here, kind of test this area, and then pull back. So you still have another $1 to $2 in this trade. If you are currently holding long, make sure to take some profits at around that 152.5 and then leave that runner, because as long as we can kind of stay over this 5 and 10-day moving average, you're going to want to hold this potential trade for a break over 152.5 to kind of come up here and test 155, 156. That's just a little example. I'll quickly go over Tesla. Tesla was extremely weak off the investor day here, came all the way down, lost its channel level, came down to this lower Bollinger Band that you can see. This rising Bollinger Band is getting significantly tight, so we are looking at a potential break to the upside or downside on Tesla. Now, Tesla's a little bit more on the weaker side here, but you can see if Tesla can start reclaiming this 25 and 10-day moving average sitting at around 201, we've got a lot of room and a lot of potential to kind of stretch into 213 and then 220. We have to also remember that last week we had a tremendous amount of call buying coming in for Tesla for this week's expiration, which is going to be the 10th of March, that were coming in for 220 and 225s. Now, there was also a significant amount that were coming in for weekly expirations. Obviously, those expired worthless, out of the money, but we've got significant kind of flow on the books for that 220 price target. So you can really see here, if you've ever traded Tesla, you know that Tesla, once it gets going, once it starts to build some momentum, it can move extremely quickly. So if Tesla does start to break over the 201.5 mark and kind of put in this high here, wait for it to pull back and consolidate, but this can really stretch. First measured potential on Tesla is going to be 213.50, and any close over that 216 area, we can say has another $4 up into this 200-day moving average. So again, stock charts are looking very, very good. Now, this doesn't mean that maybe in 2, 3, 4 weeks from now, we're not looking at another significant back test. Our line in the sand is very clear here on tech. So predominantly I trade tech stocks. If we do lose this lower channel that we put up on Thursday, that 288 mark, I would expect us to come down to around 287, 286, which is the 50-day moving average. This is going to be the big level that I'm going to be watching here. Any close below the 50-day moving average if it does happen, is going to put in that next leg down. We've got potential down to 282 as well as 271. Those would be the areas that I would look for if we lose the 50-day moving average. But as of now, this is a successful backtest. We are on the verge of a nice breakout here for potentially another leg higher in the overall markets. Maybe we get another 1 to 2 months worth of kind of run up, and then we get that significant pullback where we can kind of go back to playing the downside. But again, I hope you guys enjoyed this video. If you guys do want to trade with me, I trade each and every single day live, kind of doing this live technical analysis, trading with other traders who are doing this on a day-to-day basis. I offer 2 video courses kind of outlining my strategy and how you guys can use pivot points as well as supply and demand and price action to kind of play these levels. We don't really have to be looking for a million trades a day. We can just watch a select handful of stocks and kind of wait for those levels to kind of be confirmed. And when they confirmed, we can take potential $1, $2, $3, $4 moves in risking only maybe 50 cents or $1 per trade, which is a great risk to reward on these overall moves. Again, it's a lot slower paced. You don't need to feel rushed. You don't need to feel like you need to catch everything off the open. Again, you can just kind of sit there, sit back, relax, and let these levels confirm. I'll just run over a trade that we did. Waited all day for a trade on NVIDIA. Again, was watching this level here over the 234 on NVIDIA. On Friday, thought we were going to get it pretty much 1 to 2 hours after the bell. NVIDIA pulled back for about 3 hours. And if I kind of pull up this hourly chart here, we can see, you know, the first 1, 2, 3 hours that we kind of pulled back on NVIDIA here, came back into this channel level and kind of held, right? So what I was initially looking for, we had our opening range at around 235. I was looking for the next hour candle to kind of confirm 235 to put in this massive run up that it did towards the last 3 hours of the day. But if we kind of look at where we pulled back into the support, we were provided a sneaky kind of channel here, sneaky area. You can see that this candle here at 8 a.m. Pacific Standard Time touched and tagged this 10 and 5-day moving average. Now, if you look over this area here, this is why I have so many lines on my chart. It's not to be getting confused on, it's to see where potentially is my support. If you look at this bottom wick, we bounced off this support. If we were to lose this, we have support here, we have support here, we have support here. So you need to find out how much room is in the trade and is the trade worth it for you to put on risk. If you have all of these lines here and you feel like you're getting impatient and you need to take the trade, and if, for example, if we were to lose this area on the video of 231.25, we only had room to come down to around 230.83. This is not enough room in the trade. It's going to be very, very choppy. It's going to bounce around. This is not something that you're going to want to see going forward. If you're looking to take a short position, you need to absolutely, you know, have room in the trade. But if you kind of see here, this area that we tagged, there was a tremendous amount of room in this trade here, all the way up to this upper Bollinger Band of around 236.77. We already know that our opening range high was at 235 break. 235 had room into the earnings highs of 239, and that's exactly what it did and exactly where it stopped. We came in, we confirmed at the 9 a.m. hour. This was the candle that you needed to get in on. You would use your previous hour's low as your stop, which would also be the day's low, and then you just pretty much essentially let the trade ride, taking profits along the way and holding that runner. So if anyone is in the video, congratulations. If you guys are holding runner, we're looking for that 239 break, potentially into 242, 245. That's going to be the next area of measured potential. Again, hope you guys enjoyed the video. Like, comment, subscribe, and I'll see you guys all in the next one.